guys. I'll start it. Hey traders, how everyone's doing? I think we're live on YouTube. You guys see my screen? I'll try to move to the charts. Might be a little easier to see right off the bat. How are we looking out there in YouTube land? All I see is black screen. There we go. That's better. Okay, good. Well, we'll give it a few more minutes here, guys, just to allow people to join in. I'll talk about a couple of the trades we did this morning. I guess while we're waiting, it's been a nice little ebb and flow here on euro versus the pound we've been taking advantage of. I mean, I've just been scalping this around today. You can kind of see it on the 1 minute. Yeah, it's better. Just 5 or 6 pips. Looking for this to roll over still. We're sitting through another 15-minute down cycle on the euro, which the guys in our trading team this morning, we bought into the lows here on this dip and then took profits on a new high. You probably get back in the water here, actually. If some of you are still where's the annotation on here? There we go. So we actually started our trade up here, bought into the lows, and then coming out on the new highs. We always take profit on the new highs. A lot of amateurs, novices, even professional traders, they like to chase new highs. We do the complete opposite. 95% of the time we take profits on new highs. But this cycle here is low on the 15-minute. It's a good place to be thinking back long again, as the trend is this way. And if you should still have a piece on, for my guys know that we moved to there's different trailing methods we have, but this is a pivot stop trailing method that we use. So this is where we let the market take us out. So my guys still should be in this trade in case you get another leg this afternoon. I would have, if you're using the pivot stop method, your stop would be below here. So anyways, but what I wanted to talk about today, guys, is our prop program. I'll give a little bit of my background. the idea and the vision behind why I started the program, what I'm excited about, and just some of the details as far as how the program's gonna be different than a lot of the other programs that are out there, why it's better. And we only have a few more slots. So I actually had a trading team that we trade together every day. I called my full access team. I gave them the chance to move over first. And we're going to be trading through a firm called Owanda. It's a Forex broker. There's only really 2 operations left in the US. The amount of brokers that trade Forex are down from 40 to really 3. Thinkorswim redirects trades. But as far as direct access, it's Owanda and Gain Capital, which is Forex.com. So they don't even like taking prop program. They didn't really want to take a bunch of traders. They were willing to give us about 20 slots. So I only have 10 more slots at the at the moment. It might even be closer to 7 or 8. We've had a couple commit verbally. Anyways, we'll get into that. Let's see. Let's see how we're looking in YouTube here. Okay. All right, so we'll just bring up a new Safari window. It's nice and clean. I'm coming off a little bit of a cold too, so sorry if it's annoying if I'm constantly clearing my throat. Guys, this is my background. My name is Jason Jenkins. I traded U.S. Treasuries on the institutional side the last 10 years. And I ran a couple rates desks. And my background before that was I was a trader at Charles Schwab on the equity and options side. But I traded fixed income. And the last 10 years, kind of what we did, we had a kind of a hybrid model. We traded proprietary for ourselves. We took real risk. And then we also covered clients, did an analysis. And I talked to the biggest of the big. So I talked to the heads of the desks at all the primary dealers, a lot of buy-side hedge funds. And then from there, I mean, smaller portfolio managers, smaller regional banks we talked to. Anybody that cared about the direction of treasuries was our clientele. And so the reason people used us and liked what we did is because it wasn't about bias or opinion or storytelling or trying to figure out the fundamentals. We just had we have a very good directional approach. I guess I could go through some of the basics behind the model. We call it our top-down directional approach. You guys can read more about. I did some videos here if you want to spend some time on the site. And I'll just give you a little background on the model. So it's important to understand where I come from and then why the model works. But it's everything that we used to do on the institutional side. We still have that business, but I wanted to bring that style of market play to the independent trader, whether they're seasoned pro or a brand new beginner. And then this prop program is about working as a team, actually putting together real numbers. You're not trading in a simulator. We're taking real risk, and then having the opportunity to grow your account and put some real money behind it and trade with more capital. So that's the goal. I don't think there's a lot of programs that exist like that. And just let me share some basics of the model here. So when you join my trading team, this is what we study. There's about, I think it's not quite 10 hours of training that you get on our overall process. Um, and this is where the real value lies. So everyone is on the same team. This is a very consistent way to trade. There's an edge here that doesn't really exist in a lot of trading processes, and that's because we tend to focus not just on price or technicals, which is where a lot of traders spend most of their time, but we also have a cyclical concepts and an understanding of the time component, which actually is more important than price. So over the years, you've seen trading go from really trading started out mostly as fundamental analysis. Back in the Livermore days, he started to write out in his mind concepts of the trend and trying to understand price and reading from the ticker tape and writing down actually prices. And then from there, kind of visualizing the trend based on what he used to write down. But the technicals and a technician really didn't even come around till the 80s. I have a lot of ex-family-in-law that was all board of trade, fixed income traders. And right out of college, a few of them out of Notre Dame, they used to literally sell technical analysis down to the floor. And that was at a time when no one really knew what technical analysis was. You had to actually sell yourself and convince people what technical analysis was, what it meant to be a technician. And they would even hand draw out, point and figure charts. So nowadays, everyone pretty much is their own technician. Everybody has some concepts of trend lines and different indicators on their charts, which is good. We do a lot of that as well. But I think the next evolution in analysis is going to be the cyclical analysis. And so that's kind of what we pride ourselves on. But the origins of the model, I'm not going to get into it real deep, but cycles are just key in everything. So within this universe, this dimension that most of us live in, everything is still confined. I mean, we're confined to space and time. That's just the reality of the situation. I mean, physicists think maybe there's 10 dimensions, but the point being that energy moves in cycles, and everything is wave formation vibration. So if you understand quantum physics, everything has a resonance. So there's the same energy flow, there's the same vibration, there's the same cyclical movements through the markets, because it's energy moving through the market. So we did base our model a lot around physics and thermodynamics, all the same concepts. So I teach you guys this as part of our team member on our prop program. And then there's just a lot. There's cyclical components on a global macro level, where the business cycle is on an 8.6 year cycle wavelength, the global business cycle. And then that builds into waves of 56 years. We happen to be in a private wave right now. So there's lots of concepts that we go over. And you start to understand that cycles are about turning points. So just like the global business cycle peaked in 2007, and the real estate market happened to be the market that peaked to the exact month with that cycle. This is the Dow Jones Real Estate Index. And I have examples of this I've done on Bloomberg many years ago. This is the Dow from the Roaring 20s, and it's the same frequency that goes through the market. Now, this isn't the end-all be-all cycle. This is just one frequency, and cycles come in all different forms. Just like you have sound waves, you have longitudinal waves, transverse waves, but there's an 8.6 frequency that exists, and it exists on the daily level too. We track it. And then we have concepts that deal with pi. Pi is the perfect cycle. What's interesting about the 8.6 year economic cycle happens to be pi times 1,000 days. So 8.6 years is 3,141 days. The precession of the Earth's axis happens to be a derivative of 8.6 as well. 8.6 times 3 is 25.8. 25,800 years is the precession of the Earth's axis. So there's a hidden structure to the universe, but when we study waves, pi is a cyclical component, even in sine and cosine functions. All right, so sine waves, sine curves, very common type of wave formation that moves through the charts and through the markets. So we also study fractals. We break up our trading into different time frames. And then so the same patterns that play out on the 1 minute, we trade on the 15-minute and 30-minute. So I teach my guys about that. So it's a pretty in-depth understanding of where the model comes from. I mean, we get into things like wave formation, cycles as far as oscillations, which is an equation of motion, which is more physics. Anyway, I think you guys get the point. So it's like a stochastic is one of the main indicators we use, because it's not so much overbought and oversold we care about. It's the pendulum swing. It's the oscillation back and forth. It's the rhythm of time that we focus on when we trade. So I won't spend too much more time on that. I think that's a pretty good overview. So this isn't just about, hey, I got 2 technical patterns I trade every day. I mean, the model is way more in depth than that. And you got to really have a real model and a process to have real consistency across multiple markets. And that's what's great about our model. I mean, you can trade oil with it. You can trade Forex. We can trade digital currencies with it. But our prop program is mainly based on is only Forex. I guess I'll leave questions for the end, and let me just try to get through this, and maybe it'll make some more sense. So guys, our prop program, the way it exists, I've had this vision and this goal for a long time. I think there's so many traders that have the same aspirations and dream of being free, and they want to quit their job. They want to do this full time. And that was my dream, and I was able to achieve that. And so I wanted to build a team and help others, go ahead and accomplish that same thing. And I think a lot of the prop programs out there, they just, there's some good ones out there for sure. They do a lot of good education, but I think they're missing the coaching and mentorship along the way. And so I've been in a couple of programs as I was the developing trader before I was really involved in a lot of bigger risk on the fixed income desk. And my experience in the programs is you have a lot of traders, and you guys can maybe relate to this, that you get into a program and they get put into a simulator, and there's a level, an advancement table. And then usually you're plugged into a chat room, but usually there's no calls or being made in the chat room. So there's a moderator who's maybe even not really a successful trader. They're working for the company, but they really aren't that good a trader, or not even a consistent profitable trader. So they don't call out, they don't make calls. They just kind of point out things that are happening in the market. And they're definitely not coaching and teaching you every day in the room, which is something that you definitely get with me. It's constantly ongoing training. I mean, we're constantly working on our craft, journaling our trades. We trade together every day. So there's times where we're talking about stopping and flipping and reversing, or like today we had a nice discussion about trailing stops. So all that stuff. But anyway, well, I think a lot of traders, they never get anywhere in those programs because they don't have someone guiding them. And then I think also a lot of these companies, their trading model is based on, hey, they want to charge their traders $200 a month. And they say, here you go. Here's a simulator. We'll fund you if you can, get through the levels. Well, the levels aren't really realistic to get through a lot of times. Some of these places have dollar target amounts you're supposed to hit every week. And that's just probably one of the worst ways you can trade as a trader. I mean, my experience I've trained 5 different junior traders, all to trade fixed income. A lot of them never even knew what bonds were, how to talk the language, how to price, 8s and 30 seconds, yields and prices, and, the inverse relations to all that. It's very complicated. But I would never sit down with a trader and tell him he has to make X amount by the end of the week, because it forces a trader to take risk when the opportunity is not there. There's sometimes where you just sit and do nothing. And then there's time when market's ripping where you want to be taking more risk. But to try to hit a target every week is just psychologically is a complete wrong approach to traders. I think it gets a lot of guys in trouble. They trade well, they don't hit their target for the week, they take more risks, they blow up. It's just a bad process. So I didn't want to do that. Our goals aren't about dollars amounts. It's about consistency. It's about drawdown. I'll get into that in a second. So that's, I guess, what makes our program different is you get a trade with me in real time. There's ongoing coaching and mentoring. We're trading a real model and a process, not just throwing a bunch of traders out there and seeing what sticks. And then I think what's also unfair is a lot of these programs are made for the trader not to advance because they either don't have the capital to fund the trader or they don't have any confidence that they can manage the trader's risk. So they just rather have them on the simulator, never getting through the levels, and they're just happy collecting $200 a month and whatever made up fee they, anyway. So the way my program works, guys, and right off the bat, at the bottom here, trader development. This isn't an advancement table where you have to go through level 1, 2, 3, 4. I'm actually going to change it right now. I'll call this option. Why don't we call this option? Option 1 or option A, even better. Okay, guys, option A, option B, option C, option D. Maybe I'll put them in the other order, the next one. So it's top down. Okay, but this is how the program works. So we're going to trade together every day. There's a program fee, which is what this first column is when you come into the program. Now, this is built similar to the way I had what we called our full access team before. And this is a price you pay basically to be trained on the model. So I would charge institutional guys $5,000 to $10,000 a month just to have access to the model and for me to cover them. Okay. So this is just a one-time program fee. It's basically paying for the education and the knowledge and access to the process that we built. One of the Forex prop programs I did way back in the day when I wanted to kind of learn Forex, I paid $12,000, and that was for a weekend training. And then I had like a chat room, and that was it. The head trader was a programmer, and he had a black box that he proposed that he built. It would crank out some signals. It really wasn't that good, and the guy was gone in like a year later. So I didn't have someone to guide me, a coach, a really consistent, somebody with experience to guide me, but that was still worth every penny. I mean, those concepts I took from the Forex market, I even applied into the fixed income markets and translated into millions for the desk, for the boss, for the firm, for our clients. So anyway, that's what the program fee is. And now I have it structured at different levels, because if you want to come in and say option A for the lower price, you're going to be trading live right off the bat, but you're going to be trading your capital in the beginning. And, but you're going to be trading with me. So in the beginning, essentially, you're going to be taking only the same trades that we're taking in the room. All right. And it's basically, can you execute on the size? Do you understand the model and the process? And the goal is to help you build consistency over these minimum timeframes before I put capital behind you. So like when I used to trade junior traders on my desk, these guys would literally sit next to me and watch my every move for 3 months before they even had a trading screen, before I even turned their trading screens on. Then once they did have a trading screen, they would literally trade 100,000 lot, which in fixed income is very, very small. And they maybe traded a few times a week. So before I put any capital behind them, they have to understand the process. They have to understand execution. They have to understand all the risks. And then even then, I got to see some consistency from the trader, and I want to see what kind of habits he has. So, you know, sometimes they forget about there's a number coming up at 8:30, or when they get a trade on, they're getting nervous when it moves against them, or they're getting too greedy and they press into the lows. Little things like that. I have to watch the psychology of that trader for a while before we put any, you know, and that's the thing with the desk that I ran, is we risked our own capital. I didn't work for a big bank, get a salary, and have, you know, swing for the fences. If my trades did great, I got a big bonus. If not, I just get fired and go to another firm. I mean, if I had a losing month, I had to pay back the firm whatever I lost. I didn't get paid that month, and probably would start the next month negative. I never had a losing month like that, but I've also had months where I didn't make any. I had months where I'd be up big and then lose it all in the last week and not get paid for the month. Anyway, so we risk. That's a different type of trading, when you got to make money every day, every week, every month, or you don't get paid. And then I had to pay a salary to my junior traders. So I didn't like it when I pay the guy $3,000 a month and I'm teaching him the business, and then he goes and he takes a trade and he buys 5 million tens when he was supposed to sell 3 million tens because he clicked the wrong button or he went the wrong way. And then I have to get him out of the trade, and it cost me $5,000. Well, because of one little trade, you know, now the guys, I paid him $3,000 salary, and now he cost me another 5 on top of it. Like, so you have to show me consistency, and I have to understand who you are as a trader before we can put more capital behind you. And it's different. You have to have real risk on. It's just going to be different. Every trader is different, but when you have real risk on, the psychology changes. You're going to make different errors. You're going to make decision-making will be different. So there's no simulator that we start you out in. We're trading your capital at first, and then I'll help. And here's the thing, because you're trading your capital in the beginning, you keep 100% of the profits. So like anybody that's interested in this program, you're more than welcome to talk to some of my traders that I already have now, but we have such a high level of consistency that you're going to be making money over this time frame. So I'm helping you make money, and basically you get to keep it all as I help you learn the process. I help guide you and coach you in the beginning. Like we maybe have 2 or 3 losing days a month. I can show you guys some of the consistency from some of the new traders just recently. But that's what it's about. It's not about trying to hit us, because here's the thing, guys. If you have a $500 target for the end of the week that you got to hit, you might be trading horribly all week long, and then you get lucky on Friday and make $500. Like, that doesn't help. That doesn't show me anything as a trader. You know, you could have some serious flaws in what you're doing, or not even, you might even not know what you're doing, but to put on a winning trade, or maybe you catch a point in the market where, you know, the euro is really going one way and you're on the right side. Well, as soon as that changes, you blow up because you don't know how to adapt. You were just in a good trend for 2 weeks. So it's the consistency that matters. I don't care whether you made $50, but if you made $10 and you only had one losing trade all week, that's amazing consistency. We can make that 500, 5,000. It's the consistency that matters. So anyway, you can come in on these different options to start the program. The lower amount that you commit, because the way I look at it is, look, I'm committing my time, and I'm giving you a process that I went through years and years of struggling and losing money and wanting to quit. And through all that pain, this model was born out of. And so I'm not just going to give it away for free and spend all my morning trading with my guys. You know, it's, my time's worth a lot more than that. So when you come in, you get the model up front, but this is a commitment to me as well as to you, that if you're going to bring a smaller amount to the table in the beginning, okay. Well, I mean, if you're going to pay the smaller program fee, I got to see at least 120 days of you trading. Again, I have my junior guys, they wouldn't even trade for 6 months a lot of times. So this is the quickest I can get you to trading the firm capital. But any option that you guys come in on, you can trade. If you have a $5,000 account you want to start with, or if you have a $50,000 account or a $100,000 account. The more buying power you have, the easier it is to trade, because you can work a position in average cost easier. You know, it can get you into trouble also. But the point is that whatever, this is just a different level of commitment to me. I mean, if you're really confident in your skills as a trader, and that you can put my model on top of what you do, you want to pay 10 grand and start trading your account, and then 30 days, you know, maybe I can double the capital commitment, and you can come in at the higher option. So anyway, the advancement criteria is going to be based on mostly consistency, and you're going to have at least a 60% daily win rate. So that doesn't mean that 60% of your trades are winning trades. It means that at the end of the day, you're profitable 6 out of 10 days. Again, because there's some traders that have different styles. I mean, you might be out of the money all day, but then your average cost is close to the market and you get a little uptick. You're able to come out of that day positive on the day. If you have 2 winning trades, technically, and you look at that day that were green and the other lots came off at a loss, I'm not looking at each individual lot. It's just how you did on the day. And then 60% win rate. I will look at your different positions. Like, we take euro yen play, we take a euro dollar play, if we take a sterling play all in one morning, you know, we might have winning trades on 2 of those 3 pairs. Well, that's another thing of consistency that I care about. If you traded 10 different pairs that week, and you had a winning percentage on at least 60 of them, again, that shows me the consistency. You just didn't catch one pair that you did really well on. You're applying the same process across different markets, different pairs. That's a much more consistent trader. And then we'll look at things like risk reward. This doesn't have to be 3 to 1. the key is though, I just can't have a trader that has a 1-to-1 risk reward, because if he has a high daily win rate and he's still, his risk reward is terrible, he's doing something wrong, where he's swinging for the fence and he's having one big losing day that's knocking out all his winning days. Again, that's pretty typical of a trader that has a target, a dollar target he's trying to hit for the end of the week. And then the drawdowns are going to matter. So that's in the trader development part. I'm getting a couple texts. Let's see if there's any questions. Does anyone have questions on that so far? In the Zoom room or out in YouTube land? Let's see. Okay. All right. Well, we can always discuss further if you guys have questions. You can message me in our chat room or get my partner to read us. So I'm just going to keep going through this real quick. So that's the development stage. Okay. And then again, these aren't levels. This is just based on how it works in the professional realm. So then you move to junior trader status, senior trader, head trader. So 3 to 6 months, start backing you with more capital. The better you do, the more capital. That's the whole idea. Obviously, if you're trading the traders that have more capital, that are have more risk on, they're going to get more of my attention. But the trader keeps 80%, the firm keeps 20%. That's actually very fair. I mean, every deal I ever had was 50-50. So the firm would put up the capital. And see, guys, once you understand the professional model, it's not about you can only trade this amount, or you can only lose $300 per day. That's not really how the professional world works. We're going to have the same metrics where you do have a daily max loss. You do have a weekly max loss, but intraday, my boss, he didn't, when I was at whatever desk, it didn't matter intraday what my buying power was. If I bought 200 million tens, or I ended up being long 500 million tens, I didn't have that risk on for very long. So the way that Pershing or any clearing firm looks at, they just care about what your position is at the end of the day. So intraday risk, you could take lots of leverage. It's just the drawdown that they care about. So if for some reason the risk department is managing the P&L and they see, oh, the treasury desk is down 6,000, they might call and say, Jason, what do you guys got going on over there? I'll say, oh, I'm in a position, I'm working it, I think I can get it back, and you get it back positive on the day, that's fine. Sometimes I would have my junior trader put in the wrong handle on one of our trades, and it would show we were down like 30 grand. Well, then you get a call from the risk department saying, hey, what are you guys doing over there? Oh, we put in the new guy put in the handle wrong. Oh, okay. So buying power is not really relative in that situation. They only care about risk overnight. So that's where the risk is are you flat? Is your firm long or short overnight? That's how you figure out what their cost of carry is, et cetera. But that's where my risk was. So I could take a lot more risk intraday. They just cared about the drawdown every day or every week. And so we're not going to be taking positions overnight. This is just us trading together as a team. And then as you become a junior trader and senior trader, you'll have more discretion. So you're going to prove that at this point, you prove yourself the consistency. You understand the model. And so you'll have a lot more discretion there as far as what you trade. And the trader development, the goal is just to get you familiar with the process, get you making money, excited about it, and being consistent. And then you can keep expanding, more discretion, more capital. But that's a good deal. So I always had to split 50% with the firm. 80-20 is actually really good. And then once you get to trading big size and you're making good money, I mean, that's a different conversation. So at that point, it's tough for firms to keep a trader because they don't need to split it with the firm. They can go start their own firm if they wanted. So at that point, you know, there might be different opportunities where you have an own team. The firm can pay you in different ways. But for now, I think a 10% override for helping develop you into that position. And there'll be a leadership position at that point too. So anyways, guys, that's the basics. I will say though, if this, you know, if you guys are interested in this, I think this is exciting because it's just a totally different way to approach the prop world. It's a professional way to do it. And yeah, I'm excited about it because we have a real model, real process. We already have some great consistency. Let me show you guys what some of these most recent results from some of our new guys. Let's see. So this was July. Yeah. So this is one of my traders. We have traders all over the world, so you can notice the language is different down here. All right, but look at this consistency. He's trading Euro CAD, Kiwi, Aussie yen, totally different pairs, not just catching one bull run that happened to be in a particular market all week. This is just totally different when you can pull out money from different pairs. Okay, look at that consistency. The zeros, we can always increase the zeros at the end of that. This thing is giving me fits today. Trying to switch to a different screen. Sorry guys, this window totally disappears sometimes. It's obnoxious. I lost it. All right, here's here we go. Again, multiple pairs. Not even only the last trade on Euro Kiwi was a losing trade. That's good stuff. Real consistent. This trader's this is his third week learning the model. Really proud of him. That's just phenomenal. And that's when you guys start to understand the time component in the cycle. It's just totally different way to trade. And then you have to learn to work your size a little bit with the cycle correctly. That's what I help you do when we trade together. That's a big component. I call that the art of the size. It's really important. Most traders don't know how to work their position. Here's another trader. This was their first week or first month. And he's trading small size too, which is how you should start on a new process. But he only had only one day in the red. This is what he said about that. His first full week of trading, JRM method intraday only, and the results are terrific. I trade about 1/10 my normal lot size, get comfortable and things. Size is not important here, it's consistency. Exactly right. I want to get more consistent, but he only had one tiny loser all week. That's ridiculous. What else? There's another European trader. All right. You're just not going to find this level of consistency anywhere else. So anyway, guys, this is the thing though. I really only have about 7 or 8 slots now. Once we get trading and Oanda, the broker, sees how our group is doing, that's going to be a challenge is for us. I mean, we got to do a good job there. And, I have a lot of experience managing risk, so I know how to do it. I know the things we got to be worried about. But until we get through that review process with them, I can't expand the program out. So I already have 10 guys committed from my old team, another 2 or 3 that said they gave us verbal commitments. So I only have probably 7 or 8 more slots. So if you guys are interested, I wouldn't procrastinate on this. Otherwise, it might be a while before I have any more open spots. And so this is the best way to just contact us via email. This is my partner, Ritas, at jenkinsrm.com, or you can do support at jenkinsrm.com. And then I would also, hopefully, for those of you that are new, if you go to jenkinsrm.com, that's my main site, you'll see the chat room at the top. It's free to join our community there. It takes 2 seconds to pop in. You can shoot me a message. You can interact with the team. That's pretty much it, guys. And let's see. Yeah, that's pretty much all I wanted to cover. Let's see if I have any questions. I don't see any in Zoom. All right, guys, no questions. All right, well, listen, look forward to having some of you on the team. And like I said, I mean, it's a great team. We have traders all over the world, Asia, South America, a lot of European traders, US traders. So it's just the beginning. We're growing fast. This team is going to be pretty select and pretty tight group. So it's not for everybody, but let me know if you want to join us. Look forward to meeting some of you. All right, guys, my traders, I'll talk to you in the morning. A few of you that are on here. Enjoy the rest of your trading day, guys. Talk to you in the morning.